I'm going to bring in my next guest, Landsberg and Bennett, Private Wealth Management, their CIO, Michael Landsberg. And Michael, before we get into your industrial ideas, I want to just get your thoughts on the overall market. How concerned are you about this market? Because I know that in your notes you talked about concentration risk and also now margin debt, which is all of a sudden skyrocketed.
I think, Charles, what I look at most of all is obviously earnings. And I think what's propelled this market so far in this quarter anyway is most of the street was at 2.8% S&P earnings growth year over year. It came in at 12.8. And we were at 9 and it beat us. So most of the street was not positioned for this. So I think as long as earnings continue to be strong, or certainly stronger than expected, I think the market trends higher. I do have a little concern with the amount of risk that people have in their portfolios because I don't think some of them realize how much they have with concentration risk that they've gotten in some of the names because of the higher betas.
I'm bringing up a chart to sort of back up what you were just talking about there. This earnings season was absolutely phenomenal. Not just the bottom line, the top and bottom line crush it. We've rarely seen this, and this is the kind of spike that historically it doesn't just stop here. You feel like this momentum, this sort of earnings and revenue momentum goes into 2026?
I do. I think what's happened is I think a lot of the street has been positioned politically. I think there's a lot of dislike on parts of Wall Street and portfolio managers for some of the president's policies. And I think when you look at them missing earnings growth by 1,000 basis points, it seems like, what are they doing? It wasn't like they were at 10 and it came in at 12. They were at 2 and it came in at 12. And I think there's that momentum that I think they'll continue to outperform because a lot of that bar is very, very low. I think it's going to continue to do well. I don't know if it does 12.8 again, but I'm certainly expecting it to continue to do much better than the street, and that's why we're positioned long.
I think people underestimate just how great U.S. companies are at making money. they know how to do it. All right, let's talk about this shift now. Technology, industrials. We got some of the names you're sharing with us. Federal Signal. It's made a hell of a move, and this is one name I don't know well. What do they do?
Well, I'll tell you, Charles, I want to come to you with some non-AI names. Part of the issue with industrials is everybody, and we talked about it a couple times ago when I was on, the death of diversification. Other industrials seem to be related to data centers. These three have nothing to do with data centers. Federal Signal, they make equipment for municipalities, whether it's street signs, railroad crossings. They make equipment for police. Very boring business that continues to plug along. They had a record second quarter. And we know infrastructure in this country is not in great shape. Cities and states are going to have to keep spending money on infrastructure. Federal Signal is the way to play that.
All right. Of course, Cintas is a name that I know a lot of people know. And this is one of those names I like. You mentioned politics a moment ago. I always feel like this is one of those names that doesn't get hurt in politics. Everyone wants to see blue-collar workers do well. And for me, this is like a proxy for them.
Absolutely. And the thing they do a really good job of with Cintas is once they get into your business, Charles, they find ways to do more in the business. They start in there with uniform rentals, then they're doing cleaning, then they're cleaning your bathrooms, then you turn around, they're doing your fire extinguishers. They do a really good job of getting a foot in the door. Then by the time you turn around, they're doing HR and compliance, do a very good job of cross-selling. One of the best companies that does that.
I'm going to give you props because I'm hardly ever stumped when it comes to the market. You got me on 2 today. I don't know Safran. I love the chart, so you got to tell me more.
Safran's one of those names, Charles. It's a $138 billion market cap that nobody in the U.S. has ever heard of. It's one of the largest aircraft manufacturers in the world. And what I like about it, your last guest talked about GE. I'd rather buy this company. It grows faster, and it's got some European exposure because, as you know, Spain and Switzerland said, hey, we're not going to buy Boeing because they're mad at the U.S. That business goes to France. A couple years ago, I was on the show and talked about Rheinmetall, which was the German company that was similar to this. We've now diversified a little bit more and added Safran because huge company. They're in small, medium aircraft, defense, military. And I think Europe's going to buy a little bit more from Europe than they have in the past. That's good for a company like this.
Yeah, and the chart looks phenomenal. Michael, I love it. We got off the beaten path. Talk to you again real soon. Thanks a lot.
My pleasure, Charles.